Amazon stock has 31% upside according to Wall Street analysts that Yahoo Finance surveyed. According to 44 analyst price targets, the average valuation of Amazon stock, according to them, should be $132.94. While Amazon is currently trading at $101.59. That leaves a nice upside from today's price. Looking at the range of estimates, there was analysts that rated Amazon stock should be valued at $90, and the highest estimate suggested Amazon stock should be worth $156.50. Overall, on the scale of 1 to 5, it looks like Amazon is a closer to a strong buy here, according to Wall Street analysts. Now, they can be suggesting this estimate based on a number of things, so I wanted to go and look at several important critical financial metrics for Amazon to see how realistic and how much I agree with Wall Street analyst estimates. So, starting with Amazon's annual revenue growth year over year going back in the last decade. And I noticed that they've grown at roughly a 20% rate at the lowest, with brief rises above that, notably the rise in the aftermath of the pandemic when a lot of people were looking to avoid shopping in stores. And now that economies have reopened, Amazon's revenue growth has stalled, decreased to 9.4%. This is due to a number of factors, including the economic reopening, but also the Federal Reserve raising interest rates, making it making it harder for households to spend more money on other things because now they're paying higher interest rates when they buy a car, higher interest rates when they buy a home, higher interest rates on their credit cards. So that's leaving less disposable income available to spend on discretionary items. Another thing bringing down Amazon's revenue is consumer budgets have been pinched, inflation is soaring, and we're now far removed from the stimulus money we got from the government. So now we're coming across a time when we're comparing with uh, the year before when our bank account balances were higher than they are today. Meanwhile, Amazon is trying to make the same amount of sales it made last year when people have less money in their pockets. So, all of these factors have brought down Amazon's revenue growth in the near term to 9.4%. Although over the next decade, I suspect Amazon will be fine. If you look at the overall consumer spending online versus total spending, it's still only roughly 15%. I think that more of our spending will be shifted online over the next decade, a greater percentage at least, because it's just so much more convenient to shop online. And so in the near term, yes, Amazon's going to be pressured, but longer term, I think it'll be okay in that regard. The next thing I wanted to look at was Amazon's operating profit margin. And Amazon had been doing a very nice job expanding its operating profit margin over the decade, except in the aftermath of the pandemic. So, in the early stages of the pandemic, Amazon was absolutely crushed with consumer demand. I mean, they got a huge boost in customers and orders, and they weren't ready to fulfill that kind of increase in consumer demand, right? They were already a roughly $400 billion business, right? So imagine running a $400 business and then getting an incremental increase in $100 billion of sales, right? So it's not easy to ramp up production to meet that surge in consumer demand. So management said, you know what, if we're going to make a mistake, let's make a mistake on the side of over investing, making sure the customer experience remains excellent. So that's what they did, and now that overinvestment is hurting the company's profit margin. It fell to 2.38% because they invested, and it wasn't a precise measured investment, right? They had to do it quickly and they had to kind of guesstimate what consumer demand was going to be like because this surge was unprecedented. So it's understandable that they overshot a little bit. And one other highlight I will show from that overinvestment is the total employees. They went from around 800,000 employees all the way up over 2 million employees during just about a year and a half here from 2020 to 2022. So more than doubling their employee count in that short amount of time. And remember, these weren't low cost employees. I mean, you all remember the commercials Amazon was running during the pandemic when they were telling employees, hey, come join Amazon. We'll give you $1,000 signing bonus. We'll pay for college. We'll give you a bonus $2 per hour. We'll give you the highest average hourly wages and all of that. So they were paying above average prices to make sure that they attracted these employees because there has been a shortage of employees in the aftermath of the pandemic. So, what Wall Street analysts are probably noticing is that Amazon has room to decrease some of this headcount, and you've already seen it. Look at the tick downward from the peak and down. So Amazon has already made cost cuts and has had several rounds of layoffs. And I think what Wall Street analysts are expecting is more cost cuts, and that should improve operating profit margin without the need for Amazon to boost revenue all that much. Just save money because they are a bit bloated and they can reduce a lot of those expenses and boost their profits in that way without necessarily needing sales to jump up. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And then I think they're looking at Amazon's valuation here. Let's look at this Amazon price to earnings forward 1 year ratio trading at 40.17. It's the cheapest it has been according to this metric about in a year and a half, in about 15 months. So analysts are looking at this and saying, okay, you've got this excellent company that's experiencing some near-term trouble because of the unprecedented circumstances of the pandemic, but otherwise the company has done an excellent job. It knows its customers. It's got over 200 million Prime members. The Amazon Web Services segment is extremely lucrative and profitable. It's got strong tailwinds where that's where consumers are moving towards its services. And so all of that, I think analysts are looking at this and saying this might be an opportunity where the headwinds in the near term are going to be overcome. Meanwhile, we can get this excellent stock at the lowest valuation it's been trading for in a long time. So I can understand what Wall Street analysts are thinking here in suggesting that Amazon stock has 31% upside. All right, so that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership, and I hope I'll see you again soon.